It's noon on Wall Street and it is raining. The Dow is holding 26,000. Bitcoin holding up at 8,200. Aaron Sykes fills in for Frankie and Liquid Lunch is open for business. Hey, welcome to this Thursday edition of Liquid Lunch. We're in the first week of our second month, coming to you live, as always, Monday to Friday from noon to 1 Eastern, high atop the financial capital of the world at the Question Tequila Studios, right across the street from the New York Stock Exchange. And we have a whale of a show today. You can't even believe what's going to happen. I might start drinking in the first segment today. I usually wait till the end, but this is going to be exciting. And very exciting indeed is the market to me. We're right across from the New York Stock Exchange. I usually linger outside and see some of my friends going in the morning, ask them what's happening, what's the sentiment. I've been saying for a while that the market breaks through 26,000 and rests above there and gains a little support, could rocket right to 27,000. Same exact thing I told you last Friday with Bitcoin at 7,900. Through 8,000, any stabilization in that, Bitcoin could be back to 9,000 as well. We're going to break all of that down, plus Amazon, plus tariffs, plus morning joke and how all of a sudden they're saying Trump said it's okay to take information. I've ran for politics. I've been in every back room. Politicians will take opposition research from anyone. It's been going on for decades. Tomorrow, hopefully, we're going to have David Eisenbach here, a presidential historian from Columbia University, to tell us how many presidents in history have taken all kinds of opposition research at any cost. It's normal. And normal, indeed, is my co-host, my co-producer, my managing editor. Joining me again, Joining me today is Aaron Sykes, in place of Frank Morano. And I couldn't miss that one, believe me. I'm used to sitting next to Frank. Thanks for joining me, hosting the whole show with me today. And there's an old story about a professional baseball player, Wally Pipp, who took a couple days off. Some great player replaced him. He never played again. I told Frankie he's running a great risk here by giving you his seat because you're smarter, you're prettier, you're more successful. So he may be demoted after this.
We love Frank.
We sure do. If you don't know Aaron Sykes, she's been on Liquid Lunch before, frequently seen on QVC and all mega omni channels. She's a branding expert. She's formerly worked at Estee Lauder. She's traveled the world learning about brands and understanding them in social media. And Aaron, there's nobody better than you for some of the stuff we're talking about today, like Amazon becoming the biggest brand in the world. And even politics these days, you got to brand yourself as something. We're going to get into all of that, but I know you do a little trading, right? And we kind of mix markets with politics and breaking news of the day, as you know. And I'm kind of like where the rubber meets the road type of guy. Like, you know what I mean? I didn't go to Harvard. I went to St. John's on the 5-year plan.
Nice.
You know what I mean? But I like to try to put stuff in simple terms,
right,
so that our audience at least leaves the day have learned something from the show. I think that's valuable to our audience. And me and you were talking before we went on about trading, and you go with like a hunch. Like, what are you?
I'm in general in life, I'm very much a vibe person. So if I have a good gut feeling about something, if I have some insight, then I found that typically I do pretty well. That said, there's always room for some technical analysis and to get into the nitty gritty.
Excellent segue. But I want to remind you something. What's your vibe right now about this way this show is going today?
I love it. I mean, this is crazy.
Are we gelling?
Totally gelling, and I can't believe this is only like your second month, the first day of your second month.
It's first week.
Amazing.
Yeah, we're doing great, but I joke around about Frankie. You know Frankie. He's the hardest working man in show business. He's a multimedia animal. He produces the Joe Piscopo Show. He's on the Joe Piscopo Show 4 hours every day before he gets here. Okay? Wow. He produces and hosts his own show on Sunday morning. Does a podcast every day. Produces, writes, all this stuff. Hands me all these papers every day. I got to crunch them right before I come on. So you have, seriously, some big shoes to fill.
Yes.
And he's like my kind of training wheels, because I'm new at this. So when I start getting out of line and saying things that are a little exaggerated, he keeps me in line. So you got to help me with that. And you know, sometimes when the training wheels come off, there could be a calamity like this. So I'm hoping you keep me up and I don't wind up in the bushes.
Fair.
All right? And
Do my best.
Frankie's watching. He's down at the New Jersey Broadcaster Association convention in Atlantic City.
My hometown.
Yeah. All right. Oh, we got an Atlantic City girl here. We got Ocean County. That's Ocean County, right?
Atlantic County.
Atlantic County.
Yeah.
Okay. I'm a Staten Island. So, Erin, I want to talk about technical analysis today because I've been talking to our audience about this really unusual formation I see technically in the market. And I've been telling people that if it can close above 26,000 for a few days, it would start to build some support. But that level right now is called resistance, the resistance, right? And that's where stocks tend to hit a top and come back down. And the support is kind of, well, if it starts going back down, that's the last place it traded. So I'm going to do a little one-on-one, and you tell me if this makes sense to, you're a vibe trader, but this is some technical stuff, but it's not technical. This is liquid lunch, trading tips 101. Take a look at this. I'm going to talk you through it. Okay, so if you look at that chart, that's a 6-month chart. And if you see the two highest tops, that red line that says resistance, that's the place where when the market starts to get up, it hits some resistance there because it's never been higher than that. It's like turbulence.
Got
like,
it.
whoa. We don't know how. This is like rare air up here, right? So to go higher, you got to break through the red.
Right.
Does that make sense to you so far?
Gotcha.
Okay, and for those of you watching at home, the bottom line, the blue line that says support, that's anytime a stock starts to trend down, if it starts falling, the last couple of lows establish a support line. So somewhere in there, along that blue line is where if it goes down, it should bounce and start to come back up. The circle area is the next 3 weeks, okay? And as you can see, we're bumping right up against that resistance line, okay? And the support line is getting even closer and closer. It's coming to, I call it a devil's triangle right there.
Got it.
So if you look at that, and if you're watching at home, when the resistance and the support start to come together, okay, this is a very volatile time. And two things could happen. You can establish new highs and rocket higher, or if it breaks down, the market loses its sentiment and starts going lower, you can go ostensibly to the lowest point on the left end of the support line. And if it goes through there, you got problems, right? So the support and resistance are coming together right about now. I think in the next 2 to 3 weeks, I think with the tariffs off the table now, the Fed said they're not seeing inflation right now either, which is making the market feel like, well, the Fed usually raises rates to offset inflation.
Right.
So if the Fed's not seeing inflation, then some hawks in the market, some bulls would be thinking, well, maybe they'll cut rates, or maybe they definitely won't raise rates. So money supply will be a little more liquid, right? Money will be cheaper for the banks. So I think come the middle of July, you know where everyone's going.
Right.
The Hamptons.
Well, I mean, or the Jersey Shore.
Or the Jersey Shore. I prefer the Jersey Shore, too.
Really?
I'm with you.
We
Yeah.
prefer you.
We go to Seabright, New Jersey. Hello to all our friends at Angelica's and all those great places. Seabright and, Red Bank is real. Monmouth County, Monmouth Beach is really nice. These are really nice places. Take the family, go to the boardwalk. I won a disco ball last year. I'm going to bring it in later on the Point Pleasant boardwalk. But Erin, you're a brand expert. You've done so many things: QVC, shopping, all this stuff. So you know about brands better than me, better than anyone. That was my trick for today. Okay, the 101. That was my trick for today. But I want you to talk to our audience about this news today that Amazon surpasses Google to be the world's most valuable brand. So I don't know if that means how much it's worth, but valuable. Tell us about, from your perspective, branding and what this means. Amazon surpasses Google. What does that mean?
Well, I mean, I think it's an awareness, number one. So we're very familiar with Amazon because we are constantly purchasing off of Amazon. So that is the main difference. Whereas Google, you do search Google as like a lay person. Maybe you have a website that you use AWS or you support with some Google, but you'd also be utilizing Amazon at that time. So it's kind of where we have the most touch points as a society. So the fact that Amazon has now surpassed Google, it's really a statement to how retail can be beyond retail. So it started as a bookstore, right? And then it was able to sell products, and now you have membership, and now it's a media company and everything else. So how do you scale your business outside of its traditional retail vertical? And this is what true omnichannel is, and that's really where the brands that are winning right now, you can see a lot of divergence in the market, especially in the retail sector. And that's because the winners are going to win, and they're going to win big because they embrace omnichannel like Amazon is doing. And then the losers are going to really just fold and go away. So there's not a lot of meat in the middle. It's really two extremes right now.
I'm thinking more and more that Amazon is like the biggest monopoly I've ever seen, and the government has intervened many times in history with the telephone companies, with the utilities, and they've broken them up, right? And I don't agree with much from Elizabeth Warren, but she has one of her plans is to break up Amazon and Google. And I have a background, I work for a subsidiary of Overstock.com, so I know all about omni-channels, and I know about how people behaviors are. And I feel like when I talk to e-commerce vendors, they think their days are numbered because they have to do business with Amazon.
Right.
But then Amazon figures out where their targets are, what their pain points are, and then they target their own products at those people and crush their vendors.
Yes, yes.
So isn't that bad for competition at the end of the day?
I mean, I definitely agree that it is borderline monopolistic. I also believe that Google and Facebook, everybody is really tuned into those three companies right now. So I think that free markets are really important. I think that Amazon coming in, let's use batteries for an example, because that's the last Amazon brand thing that I bought off of there. And I would have normally gone with Duracell, and I made the switch for like 50 cents less to go with Amazon. So I think that that's just what is happening. Now, that tells me that those brands just need to re-innovate, re-energize, and find a new way. Brands.
We've been talking about brands all day because we've got the queen of branding here. We have the king of Question. We're coming to you live every day, Monday to Friday, noon to 1 Eastern, from the Question Tequila Studios. And we have the king of Question coming up next, Jason Fandrich, the CEO and founder of Question Tequila.